Today's webinar is really important. If you have been caught up with Section 24 and the removal of interest rate relief, if you'd like to know how to get around that, in today's webinar, I'm interviewing Ivor, who's done just that with his very large portfolio. If you'd like to know more information, all you need to do is watch this priceless webinar. Hi, Ivor, evening. You're already unmuted. Can you hear me all right?
Yeah, can you hear me now?
Yeah, and your mic is working fine. Very good evening. Thank you for joining us this evening.
Okay.
Now, I know you sent your bio out and some people might have read it, but tell us a little bit about you in your property journey from when you started to now.
Okay, right. So back in 2001, 2002, I'd been working abroad. I came back from abroad. My wife is from Bulgaria, and we were looking kind of into the future. I went to see a financial advisor, and he said, you don't have much of a pension pot because you've been working abroad, you haven't built up much of a pension. And he said, you need to go into property. And I said, I've no idea anything about property at all. And he said, well, I do some properties. You need to go into the buy-to-let business. So he said, but I'll sort of hold your hand and lead you through it. Anyway, my wife and I were a bit sort of skeptical. We had no idea what to do, but we were just teachers. So anyway, we managed to put some money together because we did a lot of work after school. We were teaching in different places, so we sort of put some money together and we went off and bought our first properties. And he suggested at the time, he said, you want to spread your money out over as many properties as possible, which we thought was pretty scary because we thought, well, don't we just buy one? And he said, no, buying one is not a very good idea. I said, why not? He said, well, if you got one property, and he said, then what happens then? You know, the tenant doesn't pay, you've got no money. He said, but if you've got 7 properties and one person doesn't pay, you've got the other 6 people paying for it. Anyway, that scared us. I said, I've no idea what's going on. So anyway, he said, well, this is what you need to do and I'll help you out. So off we went and we started going through estate agents and bits and pieces, and we managed to start to build a little portfolio up.
Whereabouts
so we kept on doing that. Sorry?
Whereabouts were they?
We're on the south coast. I live in Eastbourne. We bought properties in Eastbourne, properties along the coast in Hastings, which are fairly low value properties, relatively. If you're in London, they're relatively low anyway. We started looking into that and we started to accumulate properties. I used to do a lot of the practical work and tidying up, and my wife did the cleaning. We'd find some tenants, and we just went on like that. And then bit by bit, we started to revalue the properties, get some money out, buy a remortgage, and then just move on and buy another property, deposit down for another property.
So traditional investing, yeah.
Very traditional, very simple, because we didn't consider ourselves as business people. We're just doing something that someone showed us what to do. So off we went, and this just kept on going. We're in a climbing market, so basically, I don't think there was much skill on our part. It was just relatively straightforward way of going about things. So that's what we did.
Yeah, and ironically, Hastings was one of the better spots for below market value strategies going back in 2005, 6, 7 when I was doing it.
Yeah, well, that's right. I mean, obviously, I built up good relationships with the estate agents because as we were buying, then people got to know us, that we were in the market. And one thing I always did, I always went through with a deal. I didn't mess people about. And I think there was a lot of things going on, particularly when the market was rising. The Daily Mail would publish something or or a Sunday paper say, these are the hot spots. And then you get loads of so-called investors rushing down, putting in, and they're being told that the best thing you can do is go and see 10 properties and put in 10 offers, and then you might get 1 or 2 out of it. Well, of course, estate agents actually don't like that because they think, well, you're just wasting that time because we know you're not going to do that. So I actually developed some good relationships with 2 or 3 very good estate agents who said, we know when you come along and you say you're going to buy something, you buy it. You don't muck us about. You're only going to buy 1 property out of 10, it doesn't work for us. So we developed that very good relationship with the agents, yeah.
Sure.
And so they would come along to us as first call,
Yeah, so that really, from my perspective, when I teach this stuff, I say to everyone, look, you need to be a trade buyer, not a, what's it called? Name's gone out of my head altogether. Retail buyer.
Retail.
Yeah, because anything that goes in the window or in Rightmove's retail, and anything that they really their favourite person with is the wholesale trade deals, and all the best deals.
Right.
All the best deals don't go on the market, and anything that's on the market isn't really, that good for what our purposes.
Well, that's right. I mean, the thing was that that they would come to me as a first call. They knew I'd be very quick. They knew I was ready. I had already mortgages sort of already kind of agreed in principle before I started, and they knew that the deal would go through. So they could very confidently say to the vendor, look, I know you want 80 grand for the property, but this Mr. Bailey will buy it at 70, and I know he will buy it.
Yeah, and he'll do it quickly. So, how did you recycle your cash? How come you didn't?
You'll be done.
How many was you buying a year? How did you not run out of money?
It was. Well, I suppose we're buying. I mean, the biggest problem for us was actually finding the properties. Getting enough properties, and obviously other people started moving in as well. So, but we weren't in competition because we got such good relationships with the agents. So we're probably buying, I don't know, about 10, 12 a year, something like that.
1 a month. Okay.
1 a month, yeah.
Cool.
Yeah.
Okay.
And then we would, tidy them up.
And then you pretty much retired.
Well, yeah, that's what happened. I mean, we got to a lot of properties, and in the end, both of us came out of teaching because we were both teaching. We didn't have the time to carry on with that. My wife took over the sort of rental side of it. She became like a letting agent, so to speak. I looked after the properties themselves. Most of our properties are flats, looking after the maintenance, but then, of course, pulling back a little bit and just getting other people to do that. And then we had, quite a nice little income going on.
Yeah,
and of course, we did get caught in the crash. We had some money that was tied up in properties which we were hoping to refurb, and of course, the money stopped coming. The money just stopped coming in, and we almost went down. It was touch and go, because we got money in properties. We couldn't get the money out of the properties because we couldn't get the lenders.
Yeah, and it tweaked up to 6%, didn't it? And then along come the big interest rate drop and kind of saved a lot of people in that situation. Yeah,
I mean, I think that there were a lot of people who got very kind of ambitious by thinking, it's a rising market. If I buy now, it's going to rise. Mm-hmm. What they didn't look at was their cash flow, and that was the killer with it.
And
I know some, multi-millionaires went out of business because they didn't think about the cash flow.
Everything was when buying about the cash flow, but if you're buying in an area that's got capital appreciation, your long-term wealth comes from your capital appreciation, and your lifestyle comes from your monthly income. So when did our paths first cross?
Well, I think I probably came to see you, I don't know, probably about 2005, 2006. You were doing some seminars.
Yeah, same day refinance model stuff.
Yeah, to just see all about no money down situation, really, and looking at different possibilities. Yeah. Mm-hmm. I think we didn't go on a sort of steady flow. We sort of did something and sort of paused, and then we got an inspiration, and we moved on. And, you know, got a kick up the backside and moved on a bit more, and then moved on a bit more. It's a bit more like that in a sense.
Yeah, I think every time you felt pain, you come to see me for some reason.
Yeah, well, that's it, isn't it? It's, you know, is it a characteristic that drives you? And I think, you know, that's so. Yeah, so that's where we were to 2008, and then it kind of became a bit sticky. So we just said,
and you've
got what we've got an income.
And you've got quite a young family as well, haven't you?
Yeah, we've got a young family, and you know, obviously, you know, life takes over, doesn't it? You know, and we carried on like that. Yeah.
But you certainly.
Of course, we hit the buffers again. Sorry?
I said you certainly look very well for the number of years you've been on this planet.
Yeah, well, yeah, that's one of those things, isn't it? Yeah.
It's the kids keeping you young. So yeah, then we crossed paths again more recently, didn't we?
Yeah, well, what happened then, of course, was this is, I don't know if this is part of the reason for this webinar, is the fact that George Osborne came along and very quietly slipped in some legislation regarding relief on mortgage payments, and it went almost unnoticed before he decided to dive off and, you know, become the editor of the Evening Standard or wherever it was. And of course, it actually has a huge impact on buy-to-let landlords, which was this Section 24.
So there you were with a portfolio of around 40 properties?
No more than that, not more than that, yeah. Yeah. With quite a decent income, which were kind of okay to plod along with, you know. It wasn't hard work. It was it was a job, you know. We were just looking after our properties, we had a nice income, but we had a lot of flexibility. Yeah. We could work when we wanted to, things like that, you know. But what happened then, I went to my accountant. I said, you know, this Section 24, I said, could you do some calculations for me? He said, yeah, I can do that. He said, well, after 5 years, he said, you'll be running your portfolio and you will be paying the government for the privilege of doing it. Because by the time you're taxed, you will have no income whatsoever. None.
Yeah. And that's the effect it has, yeah, for definite. So
and so we had to take some action, basically. Yeah.
So what did you do?
Well, I went along to not yours, but I went along to some other seminars and visited different people, spoke to them. I said, what can we do? And then I met an accountant guy, and he was a property investor. He said, if I could show you a way to get over that, would you be looking at it? I said, absolutely, because we're in a right mess at the moment. Because we can't sell our portfolio. We don't want to. We don't want to sell our portfolio. We would be hit with huge capital gains tax issues if we tried to. We can't carry on like we are because the tax is going to rise and rise and rise, because basically, I don't know if people are listening and know what happens, but basically the relief on the mortgage payments is going to drop and drop over a 4 year period. So, to spell it out.
Yeah, how I describe it is if you've got a property generating £1,000 a month rent and your mortgage is 500, you're paying tax on the 500. And if you're a 40% taxpayer, you're getting, 5 lots of 60, so you're getting £300 a month profit after the mortgage is paid. But of course, if you don't have interest relief on the mortgage payments, your tax bill is 40% of 1,000, which is 400, which reduces your profit right the way down to only £200 a month.
Yeah.
So it has percentage-wise quite a large effect on the portfolio. So especially if you're high loan to values. So Yeah. So
Well, that's
how
right.
did you do it? I know you came to see
Yeah.
me around about that time as well.
That's right. I came to see you to look at other different possibilities. So, I mean, it was either going down the route that, from our point of view, was trying to go to get unencumbered properties, which of course you've got to pay the mortgage off somehow,
Yeah.
which means probably you need to sell some to pay the mortgage off on others. So that was one. But I didn't like that idea because I spent these years building up our portfolio and having some value in it
And then you
to
got
actually
capital
start
gains.
selling it off.
Yeah.
It make a lot of sense to us, yeah.
Yeah.
So, do you want me to carry on and what we did about that?
Yeah, far away.
Okay, so we were introduced to a company who I can pass, people will email me, I can pass some details on to the guy there to actually say, well, what can we do about this? And so we looked at the size of our portfolio and said, well, what you can do, and this is probably now 3 years ago, I think it is to incorporate your portfolio. In other words, you take your portfolio and you put it into a limited company. Now, if the limited company is actually paying the mortgage, then it's classified then as a tax, as a tax benefit to you because that's a cost to the company. So all of your mortgage interest payments will be chargeable. So, you're back to where you were before. Now all of your properties are in a limited company. So that seemed like a nice straightforward way of going about it. So what you need to do now is go and get them into a limited company. Well, of course, lenders won't just over on personal, because we had properties in our own names, my wife's name, my name, joint names, quite mixed bag. They won't do that. So what you've got to do, you've got to get new mortgages.
Yeah, so remortgaging isn't cheap.
So basically you're buying the properties are being bought by the limited company from personal ownership. Well, there isn't a capital gains issue there because there isn't a sense of a transfer of benefit. Because in a sense you own the company, you own the property, there isn't the capital gains to be bothered about. But the big issue there, of course, is stamp duty.
Yeah.
Because there was a change of ownership and their government want their money.
Yeah.
So the only way to do that was to incorporate, because there had been some case law a while ago that if your properties were, in a sense, in a business as opposed to just you're a part-time landlord, then it is possible to move into a limited company because you actually have a business. So you can do that and you don't have to pay the stamp duty because you're just transferring. But you've got to get new mortgages for all these properties. So we started on that road. It was a bit traumatic. We obviously had to get. It's just like getting a mortgage.
Yeah.
Now you're doing a limited company. The number of lenders were less.
Yeah.
Or in that, the rates were higher, and then of course the actual
profit.
The actual legals very high.
Yeah.
Because the solicitors not only wanted you've got to have you're going to have a solicitor on your side. The limited company wants a solicitor on their side, and you have to pay all of these fees. So we're talking about around about $2,000 just in solicitors' fees for each transaction.
And when we're talking over 100 transactions, that's quite a lot.
That's a lot. Normally we were paying 500 or 600 quid. Suddenly we're paying $2,000. Anyway, we started the process, and I had about 10 properties ready to go, having got mortgages for them all. I thought, great. I was just about to conclude on one of them, and the solicitor was handling it because the lenders needed people on their panel, so I couldn't use my regular solicitor. And then it just said, oh, we can't do this because of stamp duty. I said, what do you mean? No, she said, we're not happy with this. I said, well, no, I was told that I could incorporate. And she said, no, we're not happy. So I went back to this advisor who told me to go down this road. And he said, oh, he said, you can't do them bits and pieces. He said, they have to be all done at the same time. I said, you want me to remortgage all of the portfolio at the same time? He said, well, within reason, within a week or two or a month. He said, but you can't just do 5 or 6 now, then do some later on and all the rest of it, I said, well, that wasn't told to me. Anyway, he said, well, we did tell you that. I said, well, I don't think you made that at all clear, else I wouldn't be doing it this way. Anyway, we had a big discussion about it. So that actually got aborted. So that was, about 6 or 9 months of wasted time, basically, of going down that route. I said, well, I'm very disappointed with this. I said, this has really caused me a lot of trouble. He said, well, actually, since the time you saw us and all the time you spent doing this, he said, we've actually come up with another solution, a different solution, he said, which will definitely, which will avoid this whole problem of Section 24. So that's the route we actually followed. So, we've gone down the wrong path now. Now we go into this new route. And what happened there was a similar situation, but in this case, you put your property portfolio into an LLP, which is a limited liability partnership, which is a midway place from personal ownership and limited company ownership. It sort of sits in the middle for those who don't know about LLPs. And from that LLP now, which is an entity of itself, the limited company then takes shares in that LLP. And by taking the shares in the LLP, you can then mitigate the whole of the interest that you're paying on your mortgages. So that becomes will become an expense to the limited company. And then the limited company charge a certain amount back for doing that for you. So, but because you own everything, in a sense, it's your limited company and it's your LLP, that does mitigate the whole of the Section 24 situation. Okay. So that's the route that we followed. But unfortunately, because of the time, we missed the first year, so we lost 25% of the mortgage tax relief for 1 year, but that now has stopped now, so we're going back in a sense to where we were right from the beginning. Yeah, so we're back in almost the same situation.
Yeah. So you have to refinance the properties and move them across. You left them in your own ownership.
No. Yeah, basically because they actually stay in an LLP. Well, because they're in an LLP and the LLP belongs to us, belongs to my wife and I, the properties are in the LLP, but it doesn't bother the lender at all because there's nothing changed for them. Security is still exactly the same. It's just our business has become an LLP as opposed to the actual properties being transferred, if you see what I mean. Yeah.
Yeah.
So there's no remove having to happen at all.
Okay. What's the cost of actually doing that?
The cost of that to do is, well, the cost is really the accountants and tax advisors. That's the cost. And, it's finding someone who's going to do that for you. And that will be very dependent on the size of your portfolio. It's difficult for, I could give you a figure it cost me, but I had quite a lot of portfolio.
Yours is an unusual large size.
It's not a cheap deal, basically.
No. So, listen, I'm going to ask everyone if they've got any questions to ask you to either pop their hands up and I'll come and ask them direct, or to type in the chat box and I'll come over and ask, get them to... I'll read them out to you. But in the meanwhile, what's been happening to you with the size of your portfolio? What's been your biggest challenge during lockdown and how have you got around it?
Well, what I've done really, I've gone for mortgage holidays. I have one or two tenants who have been a little bit flaky. I think the problem is, and I've said this to the mortgage companies, I've contacted most of them, not all of them, I don't know they're not going to pay the rent till they don't pay it.
Yeah, exactly.
And then you're a month down the road already, and you're not going to get that money. And the problem with the government's guidance, I think the government's done an amazing job, but the problem is that some tenants think, oh, you're not paying mortgage for 3 months, and I've been told I don't need to pay, therefore, the rent for 3 months. And also, you can't get rid of me anyway because you can't evict me for 3 months. So, I don't need to pay you. Now, we haven't got many in that position, thank goodness. And again, I think it's because of the security of numbers. But we've got one or two that probably one or two probably taking a mick, and one or two probably who are in a bit of difficulty and are struggling, but they don't want to tell you they're struggling. They'd rather just
pride.
Not do anything, but it's too late.
They do ostriching, don't they? Like people that are getting repossessed.
Ostrich syndrome. Yeah, sure. Which is understandable, but it doesn't help us when we suddenly don't get the rent or anyone. So, well, I've just lost my job. I didn't want to tell you. Okay.
So, when the mortgage companies have actually given you mortgage holidays on some of your properties, have you actually had it in writing from them or just verbal?
Yeah. No, I had it confirmed, yeah.
Okay. Which is a sensible thing.
They're all doing slightly differently. Some you need to call them and have a chat to them. Some have got online, you can request it online. But they just basically stop the DDs. So, you don't have to do anything yourself. Like, you don't cancel your DDs. They'll actually cancel them or they will pause them for you. So it's all in their hands, yeah.
Okay. All right. Joe, another one of my millionaire clients who's spoken on here recently, says, please can you repeat the process? So, Joe, this is actually recorded. So all you need to do is to request a recording, and we've also a video in it and putting it on YouTube, normally about 7 days behind. So don't worry. And when you're on mentorship, we meet up once a month when we get back to normal, and Ivor's there at the mentorship mastermind meetings most months. So, and I think you've helped quite a lot of my other mentees and introduced them to the process, haven't you?
Well, yeah, I mean, obviously it's not for everyone. I'm not a tax advisor, but it depends on lots of things, the size portfolio, how you formulated at the beginning, where you're at. So it's a complex question, really, with several different answers depending on your circumstance.
Yeah, exactly. I'm getting lots of people asking about the solicitors and tax advisors. So if they want to email me, I'm sure you're happy to pass on the details.
Yeah, sure. Yeah, if they want to, give me some email addresses or whatever is going to be the best way forward.
Cool.
And I think that is to make a personal introduction to the guy who really knows what he's talking about, because he's got properties of his own.
Yeah.
And obviously
the problem of his own.
Looking after himself as well.
Yeah. And was that the one that Ajit introduced you to?
No, that's less tax for landlords, I think.
Yeah.
This is a guy that I got in touch with from a different route, a different company.
Okay.
They tackle things slightly different. Well, not say they're differently, but they're different people. But I think they're doing quite similar things.
Yeah. Okay. Okay. Right. So Gareth said, "Can I have a recording?" Yeah, this has definitely been recorded. I'm getting lots of that request. Dyson, and I think the surname is Paye. So Dyson Pay. Going forward, now, are you buying properties in a limited company name or in your personal name and taking it through the partnership, as you get better rates that way?
Is that what I'm doing at the moment?
Yeah.
Is that the question?
Yeah, it's what are you doing about it at the moment? Yeah.
Yeah, I mean, at the moment, not much is going on, but there are different people are giving different advice on this. your situation needs to be run past someone who can work it out for you, because sometimes it might feel like buying a limited company is a very good idea. Because you're out of the Section 24 altogether. That's possible.
I think it's really down to how many properties, and if you've got 2 or 3 properties, you can probably look at it in a totally different way if you've got over 100 properties.
Yeah, exactly. It's a different question depending on your particular circumstance.
Yeah, there's got to be a kick
if you're
point.
building a portfolio now, then and you've got 1 or 2, you might think that a limited company might be the way forward. It also depends on what your plan is, where you want to get to. Because we've already got everything set up, in a sense, then buying properties, continue to buy properties in their own names, just means everything keeps going into the current structure we have. And also, if I'm buying the properties to hold on to, then I would probably think that this is the formation I want. If I want to buy a property and sell it, in other words, I want to go into flipping, then maybe a limited company might be the better way forward, because now I'm trading in properties.
Yeah.
And so you're in a different situation now. It's not a straightforward answer, because there's lots of different, why are you buying this and what do you want to do with it?
I don't think there should ever be one size fits all, unless you're buying unless you're trying to buy in a specific strategy to do something. But even then, most of the deals we do structure totally different around vendor situations. And anybody who's on my weekly Tuesday webinar with my mentees and the creative ways that we buy some things, it's quite crazy at the moment, is actually how we can get around things legally as well. So Kenny, if you email me, and he asked who your tax advisor is, if you email me, I'll get the details out to you. Somebody said, what happens if you've got your properties in a name in a limited company and you die? Well, the answer to that is that someone inherits your portfolio, and that's much, much tidier than somebody inheriting your properties with mortgages that then have to all be paid off.
Yeah. I mean, again, when you're looking at inheritance tax, or succession, as I like to call it, I feel that's a bit more comfortable feeling. Then depending on what structure you have, then you need to talk to someone to look at that and say this is the better way forward. Because if you've got stuff in limited companies, then you can give shares, you can do all sorts of different things. So. Again, it's not a one-size-fits-all situation at all.
But if you're handing over to a spouse, then there isn't tax involved most of the time. You just need to make sure your accountants are aware of it. And I think you and I, Ivor, are both in a situation where we've got young children in their older years and younger wives that are probably, hopefully, going to be left with a headache, not us.
Well, someone said, well, why should I worry about inheritance tax? And someone said, well, I don't know, I won't be around to be bothered about it. But I think that we have to, there are creative ways of doing it. As children get older, then they can start taking shares already, and it changes the kind of picture, really. And you need advice on different things. I think one thing I would say to anyone listening in, your accountant may not be the best person to talk to if they do not know much about this. You need to seek specialist advice. I mean, I had an accountant, a really nice guy, did my books year after year after year after year. Really nice fellow.
Yeah, great. Really nice and costing you a fortune.
But it wasn't, he hadn't got a clue when it came to this. He said, you know what, you need to go somewhere else. Because I can't give you this kind of advice.
Yeah, and I know
it is very specialist.
The person I had people over to that does all my stuff, has been doing it for years. When I first interviewed him, I asked him what 1 + 1 was, and he asked me what I wanted it to be, which was a good start to get off onto. And because he's now got a business that is completely property orientated, and he has his own properties, and he's a tax specialist as opposed to an accountant. There aren't many things that he's not sure of, so he's worked very well for me, and I'm not sure who you use now, but I'm sure they're working very well for you. But it's really important that if you start getting into the double figures and triple figures of properties, that you have somebody who knows what they're doing looking after you. I'm going to go to Mark Gordon and ask Mark for what his question is. Good evening, Mark. You need to unmute yourself at your end. I don't think he's managing to unmute. Okay, let's go to Jeffrey Morris. Hi Jeffrey, do you want to unmute yourself and ask a question? You've got your hand up at the moment.
Oh yes, brilliant. Hi Glenn.
Hi, you're
Thanks for letting me be part of your webinar.
You're welcome. How can we help?
I was just trying to understand, so they have these properties that they own personally and maybe they're mislisted and then transferring it to the LLP. Is that quite a complicated process, or is that just having the right paperwork?
There you go, Ivor.
No, well, first of all, sorry, can you hear me?
Yeah, sorry, yeah.
First of all, you need an LLP in place, and one thing that you can't go backwards. So we were fortunate in some sense that we're able to get an LLP that had been formed a while ago and use that, and then all our tax calculations can be from that event. So if I was in my situation now, I'd be in a right mess because all of the relief has gone. The tapering over 4 years has gone now, so there is no relief on mortgage payments now. So we couldn't go backwards, yeah. But
okay.
It's like anything, when's the right time to do anything? It's usually now, isn't it? And so that's the usual answer. So I think that it depends on your circumstance, what you want to do it for, and but my tax advisors and also now my accountants, they did all the paperwork for the LLP for me. It is a process. It has to be a process, yeah.
Okay. So it's like having the right team of accountants.
Yeah, and if you drop me
establish it.
Yeah, if you drop me an email, I'm more than happy to pass on the details. Ivor said he'd pass it on. So, all right.
Oh, thanks, Glenn. Oh, thanks, guys.
Okay.
Thanks,
no problem at all.
Okay.
Okay. Let's go to Shiz Ahmed. Hi, Shiz. You just need to unmute yourself and then you can ask away. Okay, then let us go to Jayashri. Hi Jayashri. What's your question this evening? Hi Jayashri, can you hear me?
Oh, hi. I was just asking if you can recommend any tax advisor for me.
Yeah.
Because I'm quite interested in this limited liability partnership idea that you told me.
Okay, cool.
I do have a limited company, but
totally.
My house is bought outside the company. And if I want to move that house into that company, I have to pay a stamp duty, which will come to about £60,000. So I'm sure LLP forming LLP will be cheaper than that.
Okay.
And my accountant doesn't seem to know about it. So I wonder if you can recommend any tax advisor at all?
Yeah, if you drop me an email, I'll pass on the details.
And what's your email address, please?
It's Glenn. What I'll do is I'll type it on here.
I'm actually see your screen. I don't know why nothing is coming on the screen.
No, I'm not displaying because I've only got questions that everyone asks on here. I'm just about to send it to you in. Trying to multitask, talk and type at the same time. Right, I'm sending that to everybody, so everybody should get my email address in their chat box. And so if you drop me an email, I'll get it answered for you. And I'm sure Ivor, if you can just email them over to me, I'll pass them on to everybody. I've got an interesting question from Justin, who says, I love this question. What's an NLP master practitioner, and is it relevant to property ownership?
Well, it could be. Yeah, being an LLP will actually help you with an awful lot of things in negotiations and seeing your way forward and overcoming obstacles. It's if you probably look it up on Google it and neuro-linguistic programming, probably give you an easier rundown on exactly what it's all about and see if you're interested in doing it.
So let me just unmute Justin a second. Hi Justin, you there?
I am, yes.
Yeah.
Still none the wiser.
Okay. Well, you know the...
well, that was a purpose, Justin.
You know the mirroring and matching negotiation techniques we teach during the 4-day course?
Yeah.
Yeah, that's all it. That is... I'm an NLP master practitioner, okay? So many of the things and the wordings and the stuff that I do when I'm dealing with clients and when we're buying properties of all the NLP processes, okay?
Okay.
And it's all about communicating in a better way, but understanding that communication is a very large percentage of body language, and tonality in a very small amount of it is the words that we use.
Okay. All right. Because from your flyer, I'm thinking, was it a typo? And did he mean LLP, master practitioner?
There we
Because
go.
I couldn't, for the life of me, work out what an LLP practitioner
there we go. NLP. Google it. When I talk about modalities, and we talk about some people being visual, some being kinesthetic, and some being auditory, and visual people who say, "How does that look to you?" Auditory people, how does that sound to you? And kinesthetic people, how do you feel about that?
I guess so.
Yeah, it's all that type of thing. They're all tiny little things that all add up to ending up being able to do more deals. Yeah.
I understand now. Thank you.
Okay. All right. I'll have to introduce you, Justin, to another one of my clients who doesn't want anyone to know who he is, but is a master hypnosis. He does hypnosis for not just for illnesses and that type of thing, but he does stage hypnosis and have people dancing around the stage like chickens, which is a totally different thing, I hasten to add, from NLP. Okay. I have a very wide range of clients, so there we go.
Rightio.
Okay, thanks, Justin. Okay, let's just have a look, see if there's any more question. Yeah, Raj is saying he needs to move some flats into an LLP. Lots of people ask the same question. Transfer property, yeah. Yeah, I think we've pretty much covered all the questions. If for any reason I haven't answered your question, because I've got lots and lots of questions in my question box, please just retype it again at the bottom and we will have a look at it again. Cynthia says, I have an opportunity to buy land with planning permission. Could you help me to get funding to buy it? Certainly, Cynthia, if you send me an email at the email address I sent out a minute ago, I'm pretty sure that we can introduce you to someone that can sort that for you. Lorna says, is it still advantageous to do an LLP in this climate? Lorna, it all depends on the number of properties you've got and what the best way of structuring it, and it is really about getting some expert advice. What Ivor and I have had, and many other people in our sort of situation with a portfolio that's in 3 digits, is finding someone at a level that can advise us on tax. It always strikes me, I get contacted quite often by financial advisors that say, oh Glenn, we need to come and talk to you, and I always ask them their net worth, because for me, I think if I'm going to take advice on someone, I want to take advice from someone who's worth more than me, not who's worth less than me, because that kind of doesn't make sense to me. Right, here's one for you, Ivor. Will it be difficult to sell if I transfer the property to an LLP?
Well, there's no difference in ownership because you still own it. Yeah. You're basically running your properties now as a business and registered as a business as opposed to individually, Yeah.
So if you sell one, you're literally taking it out of the business, taking it away from the business, aren't you?
Yeah. I mean, LLPs are very common. You'll see nearly all solicitors, accountants, you always see LLP after the name, and a lot of people think, wonder what that means. But it's a limited liability partnership. It's a midway between personal and sort of limited company.
Yeah, and I know from speaking to the accountant, if you've got 4 different companies all running under one LLP, and one's making a profit and one's making a loss, you can actually offset within the group to mitigate losses and save on paying tax. Krasimir says, what's the minimum number of properties to transfer to? It says an SPV. Krasimir, it's not an SPV. That's a whole different thing. That's what we buy it in for specific purposes, which is a special purpose vehicle. If you mean what's the minimum numbers of properties to transfer to an LLP, it's not about the minimum you can legally do it, because I'm pretty sure it's a very low number. It's about the benefits of what you're going to get from setting it up and doing it, and whether the number that you've got is worth doing it or not.
I mean, you can buy an LLP for next to no money at all. You can just register one straight away, like in a limited company, and then cost about 20 quid if you look around. And getting an LLP is pretty well the same thing. The actual moving of the properties into the LLP, forming, putting the right paperwork together is really what the tax advisors, accountants are actually paid to do that properly.
Yeah, exactly. Final question in the evening, and are you not concerned that taking a mortgage holiday would affect your ability to borrow in the future?
Well, no, we've been told, I mean, I did hear some conflicting advice on that. We were told that this will not affect your credit rating. And I think with the way things are going, I mean, looking 6 months ahead, and no one's got a clue what's going to be going on. Everyone can have a guess at it, but no one really knows. I don't think that's going to make a difference. I think because a lot of property owners will be doing the same thing. And I think lenders are in business to lend. And I think my view is that they want to lend once they got some money to lend, because that's what they're in business to do. Yeah, so, I don't think it will.
Yeah, no, especially if you've got the letter. If you have a problem,
exactly. It's not like I've stopped paying. They've agreed, and they've actually to stop the direct debit. So it's coming from them in a sense. It was my request, but their decision, and they actually we don't just
Yeah.
stop paying our direct debit.
Yeah,
Just
I'm pretty sure in about 4 years' time we'll be looking back and going, oh yeah, that's the COVID blip, whatever it is.
that's the code. Yeah. Like the banking, like the 2008, whenever that happened, then there'll be this one. You know, we had the Brexit sort of lockdown, so to speak. Nothing was happening. No one knew what to do. And then as soon as that sort of property market started moving again, we ended up with this one. So,
Yeah,
that's
exactly.
just the way it is, isn't it?
Okay. All right. Well, Ivor, thank you very much for joining us. If you could drop us the details of
Thank you, guys.
over, that would be much. I'm sure everyone's really appreciative of you coming on and giving up your time this evening. For the
That's all right.
60 or 70, I don't know, rough guess, people who've still got their hands up. Apologies. If you do want to send me an email, I will try my best to answer any challenges or properties that you've got from that you wanted to ask and we didn't have a chance to ask. But other than that, I would just like to say that tomorrow evening we've got Dan Blacker, one of the Blacker boys, coming on. They've got an HMO portfolio on a rent-to-rent basis of coming on to 20 properties, and we'll be talking to him about how he built up his portfolio, how he manages his portfolio, and also how the COVID thing is actually affecting his portfolio. So thanks very much again, Ivor, and thank you everybody for joining us. I'll speak to you all again tomorrow evening. If you join us, take care, have a good evening, and most of all, stay safe.
Yeah. Cheers, Len. All the best.
Thank
Take
you.
care, everyone.
Cheers.